Good morning, everyone. Welcome to another webinar of AlgoBulls and Edelweiss. Today, we have Chintan Ruparel with us, who is a strategist at AlgoBulls and a founder of Prods Capital. We will be taking up the questions at the end of the webinar and we will be answering them. So, without further delay, over to you, Chintan.
Yeah. So hi guys. So today we'll be exploring the different type of technical indicators. We'll focus on two main indicators, which is RSI and Bollinger Bands. So we'll move forward. The things which we'll cover in this webinar are what is the basic terminology, RSI and its terminology, indications, what are the examples. We'll also have charts with it. There will also be swing rejections, explain what are the limitations of RSI and what is Bollinger Band, what is its terminology, what are its indications, like what are also the examples, calculations, what is a breakout in Bollinger Band, and what is a squeeze in Bollinger Band. So, and also the mean reversion algo strategy. Moving forward, we'll start with some of the basic terminology which will be used in this webinar. So, starting off with what is a breakout. So, a breakout refers to when the price of an asset moves above a resistance area or below the support. A breakout indicates the potential for price to start trending in the breakout direction. So breakout is like a price point from where there is some sort of trend reversal possible. What is consolidation? Consolidation is a technical analysis term, which means an asset is oscillating between well-defined pattern of trading levels. So what is consolidation is like when an asset moves between some point, some amount of value. So let's say if we can take an example of let's say ITC from the past 4 months has been in the range of around 220 to 280 rupees, and now it has shown a breakout and moved to around 295 to 97 rupees. So that is what a breakout looks like. And what is a consolidation is, let's consider Hero MotoCorp. Hero MotoCorp has been in the consolidation zone for quite some time. What is a simple moving average? Simple moving average is calculates the average of selected range of price and dividing it by the number of periods and range. So, why are these three things important? Is because I'll be using these terms quite often in this webinar, which makes it very important to understand what it is. So we can have simple moving averages in other technical indicators, like we'll have simple moving averages RSI based strategy. So possible. It's very important to know all the stuff. So simple moving average is not just into stocks and everything. There are multiple things where simple moving average is a very useful indicator. So these are the three terms which we'll be using in the webinar quite often. So starting off with relative strength index. So relative strength index of the security is a technical indicator which represent the recent momentum in the price of security. As per what the term means, it is like the strength present in the asset. So let's say if we consider when there is buying in the stock, the strength will be very high, so the security will be overbought. And when there is heavy selling seen in the security, we'll get back to relative strength index. So it is a technical indicator. So what does the term strength mean? So we can understand that by saying that does the stock has some sort of strength seen when there is a recent momentum. So let's say when we consider stocks which have been overbought in the past, they might be very strong in volumes and everything. So that is what relative strength index means. And when there is a heavy selling seen in a security, there might be the situation might be very oversold. So our relative strength index was developed by J. Wallace Wilder and was introduced in his 1978 book called New Concepts in Technical Trading Systems. RSI is also a momentum oscillator. So it is a line graph moving between both extremes. So let's say an oscillation in a pendulum is between two extreme ends. So this is that is what RSI looks like. It is just oscillates between the levels of 0 to 100. RSI can also be index can also be used to identify the general trend of the security. So whether we can give like whether if the situation if the security has been in the overbought situation, the trend is bullish, and if the security has been oversold, the trend can be bearish. So depending on that, RSI might be one of the very most useful indicators and very simple to learn indicators in the technical analysis field. So for example, this is what RSI looks like. So here we use the software called as TradingView for understanding what RSI looks like. So the on the above side, it is the Nifty's candlestick chart, in where the blue line is the standard moving average of the security, while in the below there is the RSI, which is the purple line. And also the softwares in this generation have got so advanced, so they have also given the moving average of RSI. So that is how so the only reason I made you understand simple moving average was that moving average will be a very common term used in this webinar. So that's how it looks like. So let's see. So if you go into trading view, select the chart which you want, just add the technical indicator, let us stand, and this will how the setup look like. So we'll just revise what it looks like. So the blue line on the chart is the standard moving average, while the below purple line is the relative strength index of the security. So here you can see what are the levels. So from so RSI has just been going up and down between the levels of 0 to 100. So there is no this sort of technical indicator has values which are very constricted. So you would get values above 100. You won't get values in which the value goes in the negative side. So this is how RSI works. Moving on to the next slide. So what are the indications of the relative strength index? So RSI oscillates between 0 to 100, as we saw in the previous chart example. So it is often plotted below the securities chart. So why is it necessary to plot it below the securities chart? So let's take the example of the opening bell at around 9:15. There was a big bump seen in RSI, and as you can see, why there was a bump seen in RSI, because there was a huge gap up opening. So plotting the whole thing below the RSI's below the assets chart makes it very easy and simpler to understand. So that's how RSI. That this is the only reason why RSI is plotted below the securities chart. So RSI levels of above 70 are the levels in which the security has been overbought or overvalued, maybe set for a trend reversal. The RSI of below 30 indicates the security is oversold or undervalued. So of course these are very traditional levels. These were made back in 1978. So these are very traditional levels. So these type of levels change with when we are considering security. So let's say if we consider this for Nifty, then this might be the levels might be 40 to 90 in bullish market and 10 to 60 while in the bearish market. While considering assets like Bitcoin and other sort of cryptocurrencies, you won't be able to use relative strength index because there are wild movements in them, and RSI might not be the only factor you should focus on. So these levels of RSI might change what on how your trading system works. So these are traditional levels, can be modified on the type of security which you are dealing in. So in the bullish market, the RSI stays range bound between 40 to 90 levels, while 40 acts as support. So what is the support? So support is a level below which if the support is broken, then there might be a more fall seen in the security. So in the bullish market, the RSI stays range bound between 40 to 90 levels, where 40 acts as support. In the same way, bearish market, the RSI stays range bound between 10 to 60 levels, while 50 acts as resistance. So this is how RSI works. So we study what does RSI in a bull market look like. So these are of course old examples taken from, let's say, 5 to 7 months back. So uh, so let's consider this. So here we can see from the start of the chart to the almost the month of November, the RSI levels didn't break the levels of 50. 50 acted as quite a bit support, and the levels were quite above 70 to 90 levels. So the RSI was very strong. Such were the markets, which propelled, like you can see how such heavy buying was seen in the market. 15,000 was when we started the chart, and now we are onwards of up to almost 18,000. So of course this is quite, it's like in August or November when the Nifty made a new high. So this is how RSI in a bull market looks like. As you can see, there are no breaks below the levels of 50, and the RSI was quite above 70 for quite some time. 60 levels were also very sustainable, and 90, when there was 90, there was like a very good momentum seen. So of course I'll read what is written on this slide. So this whole chart between August and November, RSI was range bound between 50 to 90 levels, where 50 acted as a resistance. The bullish trend continued, which propelled from the Nifty from 15,500 to 18,500. So this is what RSI in a bull market looks like when there is heavy selling, huge volume seen. And so the RSI will also be quite in the bullish side. So of course there might be multiple false alarms when you can see, like let's say that when the RSI was up around 90 levels, you might see that there might be a trend reversal, but there are multiple factors which you need to understand. RSI would be the only indicator you use. Moving on. So what does RSI in a bear market looks like? So RSI in a bear market looks like that there are no levels. The RSI levels does not cross 50, and the RSI stays range bound between 10 to 40 levels, as we have understood in the previous slide. So what is this? This is a classic example of Strides Pharma. So the RSI levels were below 50 for quite some time, and they didn't even cross 50, and they were quite range bound between the levels of 10 to 40. So we can see that there was severe fall in the price of stocks. So from around 800 rupees levels down to just 400 rupees levels. So let's say there was a 50% reduction seen in the stock between those time when there was no sort of momentum in RSI, no sort of actual buying seen in the market. So this is how RSI works. So also you must look at what the volumes in the script are. Volumes might play a very important role. So if let's say there is so in the first example which we took, where there was a gap up in Nifty, there was a huge volume, so that wasn't sustained. So that is how volumes play a very important role in every technical indicator which you are considering. So this is what RSI in a bear market looks like. We are moving forward. So yeah. So when the stock is in uptrend, so let's say we took the example of Nifty in the month of August and November. So RSI stays in the overbought condition for quite some time. So that is what a bull market is. So of course, according to the trivial definition, it means that there might be a trend reversal very soon. But this might spark a confusion and create quite some false alarms, which the new traders might expect a trend reversal, but which definitely doesn't happen because it is quite in the bullish time. So what does this mean is that RSI might not be the only technical indicator which you should focus on. There might be other technical indicators, maybe other sort of what do you call momentum you should see. What is the emotion in the market, whether there are some good sort of things happening, so there are multiple things which you should focus on. So when the stock is in downtrend, so let's say we took Strides Pharma, so the RSI stays below the oversold condition for extended period of time. This again creates a confusion, like the thing on the bullish side, the same way in the bearish side. The RSI value stays in oversold conditions for extended period of time. This again creates some sort of confusion because they expect the momentum to bottom out. So RSI just as a technical indicator just will give you what the trend of the stock is, but using it with, let's say, trend identifier, Bollinger Bands, and other ADX and other sort of technical indicators might give you might give you a very good and efficient trading system. So let's say stock has an RSI of 89% and has rallied 20% in the past week. So according to the trivial formula, there should be a trend reversal and there should be some sort of selling seen in the stock, but the trend is still overly bullish with So there are multiple other factors which we should consider. So considering the factors, the rally in the strips push should continue or not depends on the factors which are affecting the rally. So this is how RSI. So say what does this sort of confusion mean is that RSI might not be the only technical indicator you need. RSI might be one of the technical indicator in your trading system. That is how RSI works. So, so what is RSI swing rejection? So RSI swing rejection is a sort of a technical, is a sort of technical formation which is seen in RSI. Considering the price, it is seen in the RSI side, and you'll have to understand what does the chart look like. So we'll just go through what are the four major parts of the swing rejection, which is on the RSI, which is on the bullish side. Then we'll move on to the bearish one. So let's say so what is the swing rejection? Swing rejection is like there might be sort of trend reversal, but the volume isn't that good, the sentiment isn't that strong, so the volume and the swing might get rejected. So let's understand this with an example. So what does first happen is the RSI falls into the oversold category. The RSI crosses back above 30, forms another dip without crossing back into the oversold territory, and then RSI breaks the most recent high. So we'll just move on to the example because understanding this just by terms won't be that easy. So yeah. So first, let's see. At number one, we see RSI falling into the oversold category, and we can see that there was a huge candle seen at that time. So the RSI falls into the oversold category, then then it crosses back above the 30. So whenever you see such sort of formations, it is very positive for the stock as well as the sentiment boost. Because see, let's say it falls into the oversold category, then again comes back above the levels of 30. Then it goes up near the levels of 40, 50, then it again forms a dip. But this time, the only thing which you should notice is that it does not fall into the oversold category. And then, as you can see, at one, the stock was at around $40, and from there it went to almost above $48. So this might just be like around quite a bit momentum in the stock. So this is how RSI swing rejections looks like. RSI swing rejection in the bearish side. RSI is what rises into the overbought category, crosses back the below 70, forms another high without getting into the overbought territory. Then RSI breaks into the most recent low. So understanding this, if you so these are all the mirror images of each other. The bullish and the bearish side looks like the mirror image of each other. So let's say so RSI is in the overbought category. So that's around levels of 80 at 0.1. Then RSI crosses back below the level of 70. Then there is again a rise. Then there is again a rise, but this time it does not go into the overbought category. And then it falls, and then it breaks the most recent high, the most recent low, and then there is the depletion. So let's say this might be, I guess this is Nike's chart. So this is around $164, and from due to which there was a swing rejection in the bearish side, which saw heavy selling in the security. The stock went from $164 to down just $144. So yeah, these are Investopedia charts. So you can just visit them, and they might have a video or something on it. So what are the limitations of RSI? So as we know, limitations of RSI, there are some points which we need to understand, that there are multiple false alarms possible when dealing with just RSI. So considering RSI just as a technical indicator won't be that useful. You'll need to have some sort of other indicators, let's say super trend, ADX, maybe Bollinger Bands as well. So that is how limitations of RSI work. There are multiple false alarms created, and RSI just gives a momentum, which is either the securities in the bullish zone or the bearish zone. So RSI, so just considering saying this for the one last time, so RSI might not be the only technical indicator you need. There are multiple other indicators which you'll need. So moving on to Bollinger Bands. So Bollinger Band is a technical indicator. So these are Bollinger Bands are like a technical lines plotted standard deviation. So what is standard deviation? It is some sort of integrated derivation which might be in the one might be in the positive side, while other might be in the negative side. So let's say there is one simple moving average, and there might be two lines above it. So we'll see in the chart. I'm just explaining. So there is two standard deviation away from a simple moving average. So it was developed and copyrighted by world-renowned trader John Bollinger, where it gets its name from. So Bollinger Bands has three sets of bands: simple moving average, also known as the middle band, the upper band, which is one standard deviation away in the positive side, and the lower band, which is one standard deviation away in the negative side. So we'll move on to the chart first. So so of course this is Nifty's chart. It is a 1 minute chart. It's a 1 minute chart for Nifty. So how does this work is that the orange line, as you see, is the simple moving average, also known as the middle band. The upper band is called the upper band of Bollinger, and the lower band is one standard deviation away in the negative side. So this is what Bollinger Bands looks like. And so of course we use TradingView at watch. So this is how Bollinger Bands look like. So what does they indicate? So every band has a specific meaning regarding the price action. When the price of the security is near the lower band, the security is oversold and the trend is bearish. So as you can see, when the price is near, as you can see in the end of this chart, the lower band of Bollinger was broken, and you can see that there was some sort of fall in the market scene. So let's around 60 points of drop was seen. Same happens when the price of the security is near the upper band, the security is overbought, and the overall trend for the stock is very bullish. So this is what Bollinger Bands look like. We'll just have one run through about Bollinger Bands. So when the price of the security is near the lower band, the security is bullish. The security is bearish. I'm sorry. So this is what in the end of the chart around 11 o'clock, we can see that there was a huge break in the Bollinger Band scene, and due to which there was a heavy selling scene in the market. So one more thing to consider when dealing with Bollinger Bands is it's very important to see volumes when dealing with Bollinger Bands, because there might be multiple breaks in the Bollinger Band due to the recent momentum in securities. Like markets have been quite volatile for this time. So considering that what volumes the Bollinger is broken is very important when dealing with this. So volume might be one of the most important factors when dealing with Bollinger Bands. So when the price of the security is near the upper band, the security is over and the overall trend is bullish. So moving on. So this is the free 500 chart on the 24th of December 21. The middle orange band is of course the simple moving average. So we'll move on how everything is calculated here. So the upper band of Bollinger is standard deviation of the moving average. So once we get the moving average, we derive it using standard deviation method, and then we plot the bands on the upper side. Same standard deviation is a measure of variation of the set value, of course. And then the lower band of Bollinger is the standard deviation of the moving average in the negative zone. So what does the calculation and standard deviation of SMA standard deviation looks like? So what is, as we know, standard deviation might be a very complex formula, and you don't have to calculate it every while. The software will do everything for you. So so what does standard deviation look like? So this is the formula. The population standard deviation, the size of population, value of population means. So this is just for reference. You don't have to even calculate. You don't have to even put the values in it. It is just for the sake of understanding. What is the formula for standard moving average, simple moving averages? We studied on the first slide of the presentation. So let's say considering closing rate of day 1, day 2, day 3, and the closing rate of end days divided by number of days. So this is how simple moving average looks like. So every technical indicator might have some sort of chart formations which makes a technical indicator of quite some use. So these are the possible events we can see when dealing in Bollinger Bands. So starting off with what is a breakout. So when the breakouts, we can see that when the stock price breaks a certain resistance with a good spot in volumes, that is a breakout. A negative breakout is also called a breakdown, which is the downward move. When the security breaks all support levels and the trend is downtrend. What is the squeeze? When both the bands of so breakout and breakdown are not just common to Bollinger Bands. You can use it. There are multiple other technical indicators which use breakout and breakdown, but the squeeze is might be one of the might be one of the common things for Bollinger Bands. So what does a squeeze mean? So when the bands of Bollinger are constricting towards each other, then there might be, and when the moving average is also constricted, there might be no sort of momentum seen. It is like a consolidation zone for a stock. So this is how squeeze looks like. Moving on, what is the breakout in Bollinger Band? So this is the world's most famous stock ITC. So you can see that there was a good break in Bollinger Seed at around levels of 272 with very, very huge volumes. Maybe such huge volumes weren't seen in the past whole month or so. There was a huge volume seen and there was a huge breakout in the Bollinger Band. So as you can see that there was the Bollinger Band was broken at around 270 rupees levels, and the security went up and up for another to 5 to 7%, which might be very common for a stock like TCS and everything. But this considering that this was one of the most consolidated stock at that time, there was a huge break seen and there were huge volumes, and then you can see how the break in Bollinger was broken and huge buying was seen in the market. So what is the breakdown in Bollinger Band? So I guess 3 quarters back, TCS result was out post market. So or very bad results and very bad margins. There was a huge gap down opening seen at TCS around 10 to 12%. The stock opened down, so it was around 4,000 rupees levels, and it opened at around 3,600 rupees levels, or maybe even 3,680 rupees levels to be precise. And there was a break in Bollinger Band with very heavy volumes, like the volumes were such that they weren't even seen in the past 3 months. So that is how a breakdown was seen in the band. Then you can see well, let's say if imagining you short the stock at around 3680 and it went down to almost 3446, and right now is at over 3200. It was around 3000 in the past month. So now that is how breakdown in Bollinger Band looks like. So allow breakdown, and one of the most great structures of Bollinger Band is what is we call the squeeze. So as you can see, this is Hero Motocom. Of course, this is a daily chart, so it's not that common to find a squeeze in the daily chart. It's very common to find a squeeze in a daily chart. So let's say both bands of Bollinger become coming very close to each other, and you can see that there was literally no sort of volume seen in the market. They were just riding around, let's say around 238, 2380 levels to 2390 levels. So that's how a squeeze looks like. There is no sort of buying, there is no sort of volatility, there is no sort of exit entry opportunity uh, when the Bollinger Bands come closer, and then there's a situation like squeeze comes. So heading over to the strategy, the mean reversion algo strategy, which is being deployed on the AlgoBulls platform. So this is what the strategy page looks like. The code of the strategy is STAP 254. The transaction fee with the package is 0 rupees, 0%, while the transaction fee without the package is around 0.1%. The recommended duration is 180 days. What other instrument do we use in this strategy? It's Bharat Heavy Electronics Limited. It is an intraday trading strategy. The minimum capital required is 18,000, while the hit ratio is 50%. So almost let's around So if you place two trades, one will be a very positive trade. So the risk is around 15% and the ROI is around 112%. And the growth, you can see it has been a bit constricted due to the markets being in a very tougher zone as of now. So yeah, what are the overall profits and loss? So the strategy has made over 20,000 rupees in the past quarter, while the trading volumes are close to 3 crore rupees, while the total trades taken place are around 700. So this is what you can read more about how the strategy is built and everything in the details section. What is the standard deviation value? It is 2.5, while the stop loss is 0.01. So what are the returns of the strategy? So the all-time return is around 111%, while the last 30-day return is around 15.17%, which is quite negative because of the recent fall seen in the markets. And the last 2 weeks are around 5%, while the last 3 days it's around 3%. So this is what the strategy code looks like. So moving along to the questions which anyone has. Is Bollinger Band a laggard? No, it is not a laggard indicator. It is quite efficient, but see, juggled. So when dealing with all sort of securities like this, you need multiple sort of. So you need to create a trading system. So let's say I'll explain you my trading setup. How does it work? So I have RSI in one place. I have Bollinger Bands in one place. Then the third main thing is volumes, because I feel volume is quite a bit very important indicator, because if there is a breakout seen, volumes might be the best thing you should consider on. How many trade does it take every day? So the strategy takes around, let's say, around 2 to 3 trades a day, and it's everything squared off by the end of the day. Yeah, we did expect you to read up from it. Yeah, Manoj Lalwani. Actually, I'm a team of just one person, so I don't have someone else to take the presentation for me. So okay, so it's a Bollinger Band algo trading strategy. Yeah. So if the Bollinger Band hits the upper thing, you should go long on the market. So also volumes are very important. So you should, yeah. So uh, I'll tell you one thing, maybe one of the most important things of this webinar as of now, that just using RSI or just using, you need to test every indicator which suits you. So getting a good sort of trading system won't take one night or a few nights. It is a process. It takes another. Let's say you start one day, you understand one technical indicator, then you put it in your form of technical analysis chart, and then you get the result. So it is quite a lengthy process. So understanding one technical indicator at a time and then adding it to your trading system might be the only way to go forward. So maybe you should consider trying it, Umesh, because uh, without even trying, you can't even say that it looks confusing and confusing. Yeah, I guess we'll end the webinar. There are no sort of doubts coming in.
So I think we have summed up all the questions now. Thank you so much, Chintan, for your time. Thank you, audience, for your time. Take care, stay safe. Thank you.